There was a time when getting rich seemed simple. Work hard, save diligently, buy a house, retire with a gold watch and a decent pension by 65. That was the promise. Taught in school, preached by parents, and repeated by every so-called financial expert with a marker and a whiteboard. But here's the inconvenient truth. Much of what we were taught about money is flat out wrong. Not lies, not intentionally misleading, just outdated, based on a world that doesn't exist anymore. Today, if you're still following those old rules, you might be working harder than ever and still falling behind. Inflation, stagnating wages, skyrocketing housing costs, it's a different game now. So, in this episode of the Money Compendium, we're breaking down 10 of the most common money myths that are quietly sabotaging your success. These aren't just harmless misunderstandings. These are ideas that keep smart people broke, stuck, or spinning their wheels, thinking they're doing everything right while wondering why wealth still feels out of reach. This isn't about shame. If you've believed some of these, trust me, you're in good company. So did we. That's what makes them dangerous. So let's set the record straight. Number 1. Renting is throwing money away. This myth has survived for generations, but it's not the universal truth it's made out to be. Jordan thought so too. She spent 5 years saving for a down payment, convinced homeownership was her ticket to financial freedom. But when she finally bought, she realized she was house rich, cash poor. The real cost of ownership hit hard. Repairs, property taxes, homeowners insurance, rising interest rates. Suddenly, she was locked into a mortgage in a city she didn't love. Here's the truth. Renting doesn't mean throwing money away. It means buying flexibility, freedom, liquidity. Buying can be smart, but only when the math works and you're ready for the commitment. Renting while investing the difference? That's not a waste. That's a strategy. Homeownership isn't always freedom. Sometimes it's just a prettier cage. Number 2. You need to make more money to get ahead. Making more money helps, no doubt, but it's not the golden key. Rachel doubled her salary in under 2 years. Great job, more security, but her bank account? Still empty. Why? Because her lifestyle doubled too. She upgraded her apartment, leased a luxury car, booked nicer vacations, started dining out more, and her expenses rose to match every raise. Wealth isn't just about income. It's about the gap between what you earn and what you keep. That gap, not the paycheck, is what buys freedom, peace of mind, and long-term options. Rachel didn't get ahead until she started tracking her spending, living below her means, and investing the difference. You don't need a $200K a year job. Sometimes you just need a 6-month cushion. Number 3, debt is always bad. Debt isn't good or bad. It's a tool. And like any tool, it can build or destroy, depending on how you use it. Yes, credit card debt at 27% APR. That's financial quicksand, but not all debt is toxic. A low-interest student loan that boosts your earning power? A business loan that scales your operations? A mortgage on a house that appreciates and cash flows? Used wisely, debt can accelerate your wealth. The problem isn't debt, it's bad debt paired with poor decisions. Blanket avoidance of debt is like refusing to drive because accidents exist. You're playing it safe, but you're also standing still. Understand the risk, read the terms. Use it strategically, not emotionally. Number 4, you need a budget to build wealth. This one's controversial. Because yes, budgeting can be a powerful tool, but it's not a requirement for financial success. Some people thrive with spreadsheets and envelope systems. Others feel overwhelmed, discouraged, or guilty, and end up quitting altogether. What matters more than micromanaging every penny? Systems, awareness, automation. Millionaires aren't all budgeting wizards. Many of them just set smart defaults, automated savings, fixed investment contributions, capped discretionary spending, and let the system work in the background. If budgeting helps you, use it. If it paralyzes you, focus on building frictionless habits that still lead to the same outcome. The best system is the one you'll actually stick to. And never be afraid to outsource the boring or the stressful stuff. If you have trouble managing your budget or setting up a system that keeps your money safe, seek financial assistance from an expert in accounting or finance. It might just be the best move you make. Quick gut check. If any of those myths felt like a personal attack, take a deep breath. It's not just you. These beliefs are everywhere. We've all bought into them at some point. But now that you can see them clearly, you've already taken back some control. That's how real financial change starts. Not with a spreadsheet, but with awareness. And we're just getting warmed up. Let's dig into the next set of myths. And trust me, these next ones are even more deceptive. Number 5. A college degree guarantees success. Let's bust this one wide open. Yes, higher education can be a path to upward mobility, but today, it's far from guaranteed. In the US alone, over 40 million people hold student debt, with the average borrower owing more than $37,000. Meanwhile, countless graduates find themselves underemployed, working jobs that didn't require a degree in the first place. Meanwhile, skilled trades, coding boot camps, and digital entrepreneurship are creating six-figure earners without a diploma. The degree still has value, especially in fields like medicine, law, or engineering. But if your degree isn't helping you build leverage, it might just be a very expensive delay. School can teach you a lot. But don't mistake the classroom for a guarantee. A diploma doesn't close the wealth gap. Execution does. Number 6. Buying in bulk saves money. Not always. Let's talk about phantom savings. Brianna swore by Costco runs. Giant jars of almond butter, multi-packs of detergent, shelves full of frozen organic everything. But every month she threw half of it away. Expired food, unopened products, forgotten leftovers. Sound familiar? Buying in bulk can lower your per-unit cost. But if it increases waste, clutters your space, or encourages mindless consumption, it's not saving. It's wasting in disguise. The true savings? They come from mindful stockpiling, not hoarding. If you're not actually using it, it's not a deal. It's just future trash with a receipt. Number 7. Financial success is just about discipline. This myth sounds noble, but it's dangerously incomplete. Yes, discipline matters, but systems are what actually change lives. Think about it. Even elite athletes, CEOs, and billionaires build routines and guardrails to reduce decision fatigue. Why? Because willpower is a depleting resource. That's why automated savings, auto bill pay, and friction-based spending limits work. They make success inevitable, not optional. The truth? You don't rise to the level of your goals. You fall to the strength of your systems. If you rely on discipline alone, burnout isn't a risk. It's a guarantee. Let's pause. These myths? They're dangerous because they feel safe. They sound familiar, like something your uncle told you at Thanksgiving. But when we internalize bad advice, we start building financial houses on shaky ground. These aren't just harmless ideas, they're traps. But now that we're exposing them, you're reclaiming power. You're trading illusions for insight. So let's finish strong. Number 8. You should never talk about money. This belief doesn't protect you. It isolates you. When money becomes taboo, we lose the most powerful tools in the wealth-building toolbox: community, comparison, and conversation. Think about it. Silence keeps salaries low. Silence hides generational trauma. Silence allows predatory lenders, bad contracts, and financial abuse to thrive. But when you talk openly, with mentors, partners, friends, you start to see patterns. You learn faster. You dodge traps. Wealth likes clarity, and clarity comes from conversation. Talking about money won't make you greedy. It'll make you powerful. Number 9. If you work hard, the money will follow. This one hurts because it should be true. But we all know people working 60-hour weeks with nothing to show for it. The real wealth accelerators? Leverage. Ownership. Systems that scale. If you're trading hours for dollars, especially in jobs with capped ceilings, you'll always hit a wall. Hustle is noble, but direction is non-negotiable. You can dig the deepest hole in the world, but if you're in the wrong spot, you won't strike gold. So yes, work hard, but aim that effort at things that multiply. That's how you build lasting wealth. Number 10. Once I make more money, I'll figure it out. If that were true, high earners would never go broke. But studies show that nearly 78% of NFL players and over 60% of NBA players face serious financial trouble within a few years of retiring, despite multi-million-dollar paychecks. Why? Because more money doesn't fix bad habits. It magnifies them. If you can't manage $1,000, an extra $100,000 won't fix that. Start now. Track your spending, automate savings, set limits. Treat your current money the way you want to treat your future millions. Wealth isn't just about how much you have, it's about how well you use it. The most dangerous money myths aren't just wrong, they're expensive. They make you chase the wrong dreams, shame yourself for invisible mistakes, and wonder why you're still stuck. But here's the truth. You don't need to play by outdated rules. You can stop guessing and start designing. Financial success isn't about perfection. It's about awareness. So if this episode helped you see your money differently, pass it on. Share it with someone still stuck in the old game. And if you're ready to keep sharpening your financial mindset, like the video and subscribe to the channel. With your help, we can build a community, a group of like-minded people ready to change their financial futures.